Thank you guys for joining. This is our real estate podcast, and today we have Ken McKee with Canopy Mortgage. He is a returning guest. Welcome, Ken.
Thank you.
And our new guest, Agent Biza. Welcome to the podcast. Let's start with the latest news right now, where it's 37 days since the government has been shut down. And the question is this shutdown, does it have any impact on the real estate market? I know that when it comes to specifically the FHA and the VA loans with processing stuff, are you seeing any delays or any issues with that?
We've had one person that had to get private flood insurance because the government flood insurance is not available right now. But everything else, like for VA, is pretty streamlined. Everything you can do on a website, VA's got a really good website. FHA hadn't caused any issues. We've closed VA, we've closed conventional, we've closed, I think if we had a more of a presence of federal workers in the area, it'd probably be an issue because like ordering verifications of employment for them, probably not going to happen right now. So, and you have to have that to close. Mm-hmm. So, that's probably going to be, it's probably an issue in other parts of the country more so than here.
So, for example, if someone is working for the government, and they're not going to work, they're not working because of the shut, they're not getting paid.
They're getting paid.
Okay, so let's say if they're in contract,
yes,
and then right now
it's a problem.
Yeah. At the Fed meeting, they lowered the rate by 25 basis points, and I heard that Powell mentioned that
last week.
Yes, last week.
Yeah.
And he mentioned about the December, that in December, he basically said that another cut in December is not a foregone conclusion. So,
and then he said, far from it, which the market hated. And so rates actually went up a little bit. So it's, the Fed, people confuse sometimes the Fed. Just before I got here, someone had said, I heard rates are 4%. Is that true? And I'm like, no, it's not true. That's the federal funds rate, which is an overnight rate that people that banks borrow or pay when they borrow money from the government or each other. And while rates move in tandem, often in similar directions, they don't always move in the same direction at the same time. Mm-hmm. So, like, to take it back, before the last one, so the September meeting was the first rate drop we had. Mm-hmm. August 22nd, at Jackson Hole Symposium, Jerome Powell, the Fed chairman, announced that, hey, we're gonna shift our policy from hold to start cutting. Well, from then until the next Fed meeting, which was I think the 16th and 17th of September, so from August 22nd to September 17th, rates got better by 0.3%. On the day that we had the actual cut, mm-hmm. rates went up because he wasn't like, we wanted to look like the traders are looking for more certainty that these are going to continue to happen. And so the same thing happened again this meeting, last week. Rates went up, even though we got a 0.25. Now, if you have a HELOC, great, it went down. If you have a credit card, great, it went down. But 30-year fixed mortgage rates went up. And then today we got better because I think they're thinking that we can talk about it later, but they're thinking the Supreme Court's not going to back the tariffs, which would mean that those will all go away, which would be seen as everyone's complaining about it, that being inflationary. Mm-hmm. So if they go away, it's the other direction. It's disinflation, right?
So that's mainly the main reason why he's hesitant, is because he's still looking at the inflation, right? Is that the main goal? Why?
Jerome Powell?
Yeah.
It's uncertain, is what they're saying. Mm-hmm. Yeah.
That's got to be the worst job ever. Like,
I would hate it.
Everybody hates you either way.
Yeah.
You go one way.
Yeah. No one's giving you at all.
No.
So
you kind of, if I may, you kind of did it a little bit already, but can you kind of break down a little bit more, kind of one-on-one, like 101 relationship, federal fund rate, with mortgages, and then kind of like truly, what does, to the layman, what does 25 basis points really mean? How does that affect
It's a great question. So 25 basis points is 1/4 of 1% of the loan, like a loan amount. And so you basically have, if rates drop, like if the cost to get a rate dropped by 1/4 of a point or 25 basis points, then you pay 1/4 of 1% less on the home. So like if it's a $400,000 home, 1% would be $4,000, so you pay an extra $1,000 to get, if it goes up. If it goes down, you pay $1,000 less. So here's the difference though. The Fed funds rate is an overnight rate. That's literally one day. we're looking at 30-year mortgages, which is on the complete opposite side of the spectrum, like the shorter, the end of the yield curve. You have 1 day, and then we have like month notes, 2 month, all the way to 10-year, and then 30-year mortgages.
Mm-hmm.
Rates tend to follow in the same direction. Usually the Fed funds cut sometimes will help the Treasury, the 10-year Treasury go down. And that kind of like mortgage rates and the 10-year Treasury typically follow each other. Again, not perfectly, but.
Which that's been inverted, for almost 18 months now, right?
It's back. It's uninverted.
Okay.
Yeah. So like I looked at it today, and today the 10-year Treasury dropped by like 7 points, which means that basically like the rate tomorrow should be like 0.07% better.
Mm-hmm.
But it's not guaranteed.
But for you, literally, you're like day to day, by the hour almost, you're monitoring, right? As far as when you want to lock somebody in, right? You might want to wait a little bit. You might want to, oh man, I wish I locked it in yesterday. It's literally that dynamic of a process.
Yeah. And I tell people for purchases, I would lock in, like when you get in your offer accepted, you lock the rate. Don't mess around with floating, especially when we close like shorter closes, like 14 days or something like that. If something goes wrong and goes the opposite direction of what they wanted it to go to, then you have less of a time to recover and then relock.
But you can always, but if it goes down, right, you have room to potentially relock if you need to know.
Not really. I don't know many people that do that. And I
feel like maybe
builder loans have a deal. Like if you're a builder loan, you're off for like a year or something like that, they'll give you a one-time float down.
Okay.
As long as you are you have to be certain way through the loan, like the construction process. Sorry, so you have to maybe like be ready to go.
With the home builders, right?
Yeah. But for like normal rates, like when we lock you in, and we're paying for that rate right there.
Mm-hmm.
Yeah.
So when we're looking at the mortgage rates, I know that now it's been 3 years since we were above 6%.
For mortgage rates?
Yes. Has it been 3 years?
We've been how long? So how many years have been we're over 6%? Yeah, I say like since middle of 22.
Yeah, and I remember people were saying that if rates remain above 6% for more than 2 years, market's gonna crash. Home prices are gonna come down. We haven't seen that.
No.
Right. And what do you think is the main reason that we haven't seen that?
I mean, I would say that supply and demand have remain relatively intact, right? In areas where there's more supply than demand, then you see price reductions, seller credits, things like that. Concessions. So I would say, yeah, and I think we'll talk about it later because you want to talk about like the highs and lows for buyers and sellers. But like this year, we have more people getting like credits from sellers. We have like right now we have 10 loans in escrow, I think. And like 7, 8 of them have concessions, and one of them had $27,000 in concessions, like a $1.5 million home, Wow. So it was interesting. I love Altos Research. You ever use that? Do you ever seen it? It's like you can see trends. Like
you hooked it.
Yeah, it's pretty cool. You can see trends like in the whatever zip code you want.
Okay,
Zip code.
Yeah.
So like I checked it out yesterday. 95765, which is Rockland. 37% of homes on the market as of last week have had a price reduction. 95661, East Roseville, 58%. So you're guaranteed you're going to see softer pricing there. You're going to see concessions, things like that.
But that kind of tells a story that the prices in a way are sort of coming down a little bit.
Yeah.
I was looking at just like the overall market with home prices, evaluations, even though I don't completely trust Zillow with all the data that's there, but almost any home you pull up, it's kind of flat. It's been flat for the last 3 years. Do you guys hear the story that Freddie Mac and Fannie Mae they're talking about them going public?
Yeah.
And I've heard this lady, what's her name, Lori Goodman from the Housing Finance Policy Center in Washington, D.C., she basically said that if that happens, definitely mortgage rates are going to go up. What does that have to do?
I don't really know that I agree with that. I don't think it's going to make a big difference.
Well, she's basically saying that the sort of like some of the regulations that the Fed has on the mortgage industry, that they're going to go away, and that's what's going to cause the rates to go up?
I mean, I don't know. I mean, I think there's still competition. You know, you have different investors, aggregators, lenders who will want to buy loans, and they want them.
Mm-hmm.
So it's really going to be the pricing is more like, I think, based on competition than whether or not it's a government sponsored entity or totally public.
Mm-hmm. So does it even matter, like let's say from our perspective, does it really matter whether this happens or not?
I don't think it does.
No? Okay.
But I'm not like a Fed economist.
Sure.
So,
yeah, I understand. So we're in November. We're approaching the end of 2025. When we look back at the year, how about we talk a little bit about the highs and lows of this year? What were some of the things that were maybe hard or some challenging moments this year in the real estate industry that we've had and maybe we had to overcome, or maybe something on the positive side?
Yeah, I'd like to hear what your thoughts are.
This year, I felt, well, I shouldn't say felt, I experienced, I guess. You know, everybody's classical question about pricing and what's going to happen. Is it going to go up or down? And do we wait, blah, 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 all this and that, to buy and or sell, whichever side of the equation folks are on. What I noticed this year is with stuff that's priced correctly and stuff that's ready for retail, it doesn't sit.
Right. It goes quick.
It just goes. If we're, reaching for the stars on something that could use a little love and we're trying to be super retail when maybe we're not, that stuff's going to linger. And then that's when you're going to get offers that are, coming in slower, they're coming in lower, and then next thing you know, it's not just a clean offer. It's like, well, we could use some closing credits. Well, maybe a bite on this and that. And now you're starting to get into the weeds. Like if you're on the selling side, they've already, the time has gone by and now they're like, oh, and they want this and they want this. Well, it's like, well, yeah, they do, because you hit that magic day on market where people think they can come in and start eviscerating.
Right. It's like something's wrong with it.
So I literally had a transaction and not that in this market, and I guess overall, I would say a 30-day time on market technically it's normal, right? We've just gotten spoiled through COVID and that uptick even to COVID where things were moving super quick. But I had somebody like, hey, we're going to ask for a credit and this and this. I'm like, okay, cool. And I, especially when I'm representing my sellers, always I try to say, hey, what's the justification? Like, what do you need? I got to go in. I got to sell them on the fact that
why are you getting a credit?
Yeah. And so like, oh, well, we just figured you're 30 days on market. Like, okay, Marcus, what about this number? Like, this is a number kind of arbitrary. Like, what is this towards? Like, give me something. Yeah. And so, we, I fought off that credit, or fought off half of it, I should say. But point being is, when we're starting to see that, what I would argue probably more of a normal time frame, not us being spoiled and wanting to be in the contract, a week in. Now that's when it's just folks are thinking that they can come in and do something. Yeah. And am I the same way with my buyers? Sure.
Of course.
But I try to articulate stuff. Like right now, I'm in escrow. We're getting almost 15, 16K on a 570 purchase in credits. Yeah. But everything's articulated. Hey, this is for closing costs. Hey,
inspections,
post-inspection. Here's a couple things. And I was ready to fight tooth and nail, but they just agreed. Yeah. They just went with it.
Because it's either that or they go back on market. It falls out. They go back on market. And everyone wonders, why the heck did it fall out of escrow? What's wrong
exactly.
with it?
So, that's kind of what I'm kind of seeing. And, I mean, you remember some of the properties we were looking at. Something that's nice and retail ready, that, nice remodel. It's gone. It doesn't sit around. Multiple offers. Yeah. We have had this year. This year has been super, when I say high and low, I've had the properties that the offers are coming in over ask and multiple. And then I've had the longest listing I've ever had in my life. That finally just went in. I'm not even going to say it. This is on record. No. You can do the research if you really want to know.
Well, if it's positive news, you should share.
No, but here's the thing. What I'm getting at is it's been the longest listing. And there's caveats to this one. It was, I'll give you a little bit of context. But point being is, it was a long time. Let's just say we went market right around the time of tariffs coming in. Oh, wow. And we've talked about this one before. Yeah, we've talked about this one before. It's in a 55 plus community. So all of a sudden your buyer pool is already smaller. a lot of cash transactions there. But what was that whole, even to this point, tariffs and whatever else economically is going on, the key word is uncertainty. And what happens with uncertainty? Everybody holds on.
You pause. Yeah.
So now all these people that are cash, heavy, they're not spending money like this.
Yeah.
They're not. And so fast forward to just this last weekend, we had 2 offers in one weekend. Wow. Where were you guys months and months and months ago?
Right.
Yeah. But that's just kind of how it ebbs and flows, Yeah. It's been an interesting year for sure.
Yeah, this year, same for us. Most of the sales on the listing side for us have been very challenging and nuanced deals. Let's say, one of the buyers, they have their home that they need to sell, or there's multiple different contingencies. Sellers at first, when we're talking to them at the listing appointment, they have certain expectations for the price, right? And then after months, the reality starts sinking in, and they realize that, yes, indeed, the market has changed. We don't want to sit on this house. We don't want this home to sit on the market. Yeah. Let's start lowering the price and stuff. So I would say it's been quite challenging year when it comes to on the listing side. Well, and the same thing kind of for buyers, because right now we have a list of buyers who want a particular property with certain specifics. And because, the inventory isn't all that great, there's not that many homes over there on the market right now, and they're not in a rush. So it's sort of like, it's just taking a lot longer to find the right property for them.
Well, look, when it costs more money, you hang on to it for longer. Like if you whatever you buy, if it was here and now it's here, you're gonna reevaluate whether you really need to buy that, right?
Yeah.
Or is it going to really meet your needs? Is it going to fulfill? You're really going to love it.
Yeah.
So I would say this, I was thinking about earlier, winners this year, I think, were buyers and losers were sellers. And what I mean is I think a lot of sellers thought it was still like 2021 where they could just list it high, the market would catch up, no big deal. And it's just not been the case.
So that's funny that you mentioned that, because part of my, what I like to do in my listing presentation is I do my numbers, do my research, and I come in with 2 net sheets. I'm like, hey, here's what I call a reasonable range.
Yeah.
You want to be somewhere between here on your list price, because this is where I anticipate it's going to close.
Yeah.
Now, can you close higher? Sure. Can you close lower? Sure. But if you list here, you're kind of in the ballpark. And what's interesting is during that time frame, everybody would go above my top number, which is, hey, okay. Now, if you're too far above, maybe we should find different representation. I don't want to sit on that. But point being is this. We would go above and we would get it in a multiple offer situation.
Yes.
Fast forward to now, I'm more adamant on, hey, don't go above this number.
Because there are less multiple offer situations.
Don't go above this number. If anything, I'd stay middle to lower. And because when we sit down and we start looking at data, I'm going, hey, look at this. When I see prices, there's some stats that we have through our MLS and the trends where you'll see that, hey, things were closing at 101, 102% of ask price. But I'm like, hey, look at this. Your neighborhood's been closing at 98, 99.
Yeah.
So you guys are not getting what they're asking. So the chances are, more likely than not, you're going to be in this range. Yeah. So don't go too high, because then you're going to come down. But if you want to be that 100%, that 101% guy, stay right here. And that's what's changed right now. What's different is trying to make sure people have that frame of reference to hey, it's not hopping
No.
Sure, some properties are sticking out, and that's why I hate when on the news or articles or wherever people like to paint broad strokes. You can't just from states. What's the climate like in the nationwide versus state versus county versus city? It's literally property specific.
Yes.
You got to go deeper between the school districts, zip codes, all this and that, to look at an individual property and see, okay, cool, is this going to be hopping? Right. We always on our listing presentation, I always look at, hey, let's look at your competition too. We start out with if somebody's coming to look at your house, are they going to look at your neighbor's house down the street? And then we look at comps, and that kind of 9 times out of 10, most folks realize I make them give me a number.
Yeah.
And I'm going to say most folks will stick somewhere within my range. But obviously everybody wants to
go higher.
To go higher. But that's kind of what I'm noticing is like, it's not, you got to look at the data. You got to look and see what's actually currently happening.
Yeah.
Because if you're still, like you're saying, you got your 2021 hat on with pricing.
Yeah.
You're not there.
And I think sellers don't understand, or I don't know if it's communicated enough, but I find they don't understand like, hey, like when you drop, if you're too high and you have to drop the price, 10 grand of a drop is $70 a month to the buyer. It's nothing. It doesn't move the needle. And rarely do I see that when someone drops the price of the house that they get that price. It usually means if you drop 10, you're going to end up taking the 20 grand hit. And so better to have 2, 3, 4 buyers, because it's a totally different story just with 2 buyers.
Right.
That know another offer is competing.
Yeah.
Right. Unless they just both want to lowball, and then but there's something to work with there.
Right.
It's a totally different tone
Right.
than if you're solo one offer.
That's the other thing I always push is like with pricing too, is like we got to make it attractive to where like all I need is 2. I'll take 10, but all I need is 2. If I can get 2 people going head to head, it changes It changes the climate, the dynamic completely.
Yeah.
Because now who knows who's holding what cards, you know?
And I honestly think that, and not you guys, but just other agents I've seen, there's just few enough deals. You know what I'm saying? Like we're just so much off of where we were from the peak of how many listings there are to get that the realtor's a little scared to have that conversation with the client.
Oh yeah.
Which completely does that client a disservice.
That's true.
It would be much better to have that conversation and be uncomfortable and risk losing the listing than to not tell them, and then later they go like, how can you didn't tell us that?
Yeah, but I think like real professionals who are confident, they know what they're doing, they're going to do it. They're going to have that conversation, because ultimately your goal should be aligned with the seller's goal. And the seller's goal eventually is to sell the property, not sit on this listing for months and months. Yeah.
What do you think right now with like this year? I'd be curious to hear your side of things more so. But I love you too, Ken. No, I'm just curious because like I've noticed right now, like I think by the time the year's up, like my numbers from like as far as deals closed, it's pretty consistent, but you got to work harder for them.
Yeah.
Like I'd say the numbers are probably still pretty similar to last year and to the year before, but they're not just like, it's not like, oh, here's this deal, here's this deal, here's this.
Yeah.
Like
still a working year.
Yeah.
Oh yeah, for sure.
But would you say you guys are still coming through? And I guess for loans too, like
we're up for sure.
You're up.
Yeah. But part of that's also me like getting out there and being more aggressive this year.
You are. You're good about following up with people and stuff. So I know you're.
But I think on as a whole, like I looked at like last month, all the locks that I had were in the upper 6s, and then like this month, all the locks that I did were at the low 6s. Like it's like, you know, okay, this is when I have to like give just disclaimers and stuff, like 6.125% with an average APR of 6.216, something like that. My NMLS is 305447. Okay, I had to say that. But bottom line is that I think that like we're seeing more people move in because rates came down a little bit.
Yeah.
How many of what would you say the percentages that you're getting the 2-1 buy downs going on right now, or rate buy downs?
We had 2
out of what, 10 right now?
2 out of 10, but the other ones are, I would say 8 out of 10 got credits. It could be 7, but 7 or 8 out of 10.
But specifically that
credits.
Folks were buying down the rate.
Yeah, 2 of them. Yeah, and it was a big enough credit they could buy down the rate and then put some money to
closing costs and stuff.
Yeah.
So when you guys look at this graph, David, can you pull up the MLS October trend? When you guys look at this graph here, that kind of shows how many homes are for sale, sold, and then the ones that went pending. Well, what does this tell you guys? I mean, it does kind of repeat seasonally. It has this sort of plateauing around October and then all the way until March. Usually the amount of homes that are sold and going into contract starts declining. But we've also seen inventory decline as well.
Look at the pendings are going up, even though the for sales are going down, which tells me that like you're probably getting less of the ones that want to just see what happens. You know? I'm just going to list it to see what happens. They're not like serious. Like I think going into November, December, January, sellers are serious if they're on the market over the holidays, and it's always been that way. So prices are a little bit lower, but they're serious. They want to sell.
Speaking of like this season, right, the fall and winter. In your opinion, what do you think? Is this a good time for buyers to look for deals? because people
I think
are
it's a
kind
great
of
time.
people are a little bit distracted,
There's
and
less buyers there's less buyers, right? There's less people looking to do something during the holidays. Like, do you really want to, if you had your choice, would you want to move during the holidays? Or if you had your house all done up, but you want people walking through with their wet shoes and stuff like that to your house? No, you probably don't want it. So I think it's a great time. We have serious sellers. Values tend to come down a little bit in those few months. It's seasonal, like you said. It happens every year. And it's a great time to buy. You can also see if the roof is leaking, things like that. I mean, it's a good time to figure out what's going on with the house.
Yeah.
But I think the buyers are serious too, right?
Yeah, for sure.
The folks that are coming out in this time of year, my pitch to like, hey, if you want to buy, should I shoot for this season? It's like, yeah, because the people that need to sell are motivated. Like, you're right? Mm-hmm. Everybody wants to sell outside of school year, right? They don't want to rip out their kids. So why is the guy that wants to sell in November, December? They probably have to. It's a divorce. I'm getting relocated for work or whatever. So there's an element of motivation. And then if you couple with the motivated good buyer, well, now you guys are, you have a couple serious people that are going to, have a no nonsense conversation versus like let me just check it out. Let me try it. And then the folks that come out to the open houses in the summer, springtime, definitely kind of more, let's see what's happening versus like if you're out and about and tomorrow's Black Friday, okay, you need to do something. Like, you're trying, there's some kind of motivation there.
Yeah.
So one of the other guys who I follow is Ryan. He's the Sacramento appraiser. He has a blog, and I just recently saw this graph here.
Shout out Ryan. By the way, he's a great guy.
He is a great guy.
He's a great guy. And like, if you're a professional in the industry, he will take a call and spend. I've spoken with him numerous times on like, I've literally been stumped by pricing a property, like doing comps and stuff. I'm like, I got nothing, dude. I got nothing. And he's helped me process some complicated properties out. He's real good.
I know appraisers that use all of his stuff.
Oh, really?
In their appraisals. They'll use it, and it says Sacramento Appraisal Blog.
Yeah, he really does his homework.
He does it really well. So
yeah.
he's like, I would say he's an expert for sure.
So check out this. This is 21 versus 25. When you look at the prices, the homes that sold at original price, it's pretty much almost the same. But then when you look at like below original list price, look at that change.
Yeah, it's like flip-flopped.
And above original list price, of course, 2021, that's what we saw. That's where...
Yeah.
This is like the 4-year pricing inversion yield curve.
Yeah.
That's right.
Well, and that kind of brings us to the topic of home affordability. Like I said, the younger people, I look at the conversations that are taking place online in different chat groups and stuff. And this is like one of the biggest concerns for millennials and Gen Zers is how unaffordable homes are. And of course, a lot of it has to do with the rates, right? But when you look at the homes used to be about 2 or 2.5 times what your annual income was. Today, it's over 8. It's like 8.5. There's this
crazy. So that means if you make $100,000, you're buying an $850,000 house?
Yes.
That's crazy.
It is crazy.
It is nuts. Nuts. I mean, that just makes you completely house poor unless you're putting a big grip of money down. And I will say, I think the last time we talked, that down payments had gone up. Historically, it's been around like 10%. And it's over like 18, 19%. And I see people getting more and more gifts from family right now. Like maybe that's like plugging the gaps a little bit. But that's a big jump. 100,000 and you're buying $850,000 house.
Yeah. And there's this another graph, the chart that I saw. So take a look at this. This shows the actual median income is in blue line, and the orange one is the qualified income, right? So,
David, can you zoom in on it a little?
So what does qualified income mean in this circumstance?
So in this circumstance, it means qualified to purchase a home. Like if your income is...
That's what you need?
Yes. So look at that
Yeah.
sweet spot that it was pretty much close right up. They were aligned between 2009, I would say 2010, all the way up until obviously the rates went up.
Rates never went over 5.25% during that time. See how it was over like 2008? It's higher.
Well, yeah.
That's when rates were like on the left-hand side in 2008. Mm-hmm. That was. I remember like giving my buddy a 6.625 loan at like a half a point cost. like literally, I was making a half a point on it, and because like it was 6.625. He's like, what are you talking about? 3 years earlier, it was 3%.
Yeah.
So during that sweet spot, when we had that time when it was basically somewhere between 3.75 and 4.75%, and then when rates went up to 8, forget about it.
But here's the crazy thing. That happened in a span of months. We're talking, I want to say 3 or 4 months. Like literally, it felt like overnight.
In 2002, it fell apart.
I'm talking 2022 or whenever
2022.
Right. I want to say it was the spring of 22 probably.
Yeah, 2022.
But literally, I want to say started March, right? March, February, and it just like literally.
That's when they started.
But from that starting point to where we're cresting 8, that happened practically overnight. I mean, like in like a span of a few months. Yeah. So you literally, if you're looking at rates, it's like the cost to borrow money became 3 times more in that short of a time frame.
Yeah.
That changes things for people like drastically by 3 times. You know, it's crazy. All of a sudden overnight, you can't even afford what you could have, like literally you couldn't afford what you could afford 3 months ago.
Right.
That's wild.
So, the good news now is that like these people that bought and their rates were like 7.5%, 8%, 8.25% was the highest rate that I saw go out from our team. And like all those people have either refinanced. The servicers have done an incredible job of reaching back out to people. Trying to get them come back. And then we've obviously been staying on top of things for clients, and people are saving money. And what I'm showing them is like, take that same money that you're going to save, put it back on the mortgage, unless you have higher interest rate debt to pay off. But if you don't, pay it off, and we're shaving like 6 to 8 years off of people's mortgages.
I don't remember if I told you this, but when it was at 8.25, I got somebody locked in to a 2.1. We assumed a VA.
Oh, you assumed the VA. You actually made it happen.
We made it. It took 6 months. Oh my gosh! But can you imagine that though? Like, hey, rates are 8, but we're taking over.
Yeah.
Our rate is 2.1 and we have 27 years left on the loan. I was like, this is amazing. If you guys don't want this deal, maybe I'll step in, because that's amazing there.
The reason my second house that we bought, I did a VA loan on it because I knew that it would be assumable, and I was in Rockland, and I knew like Beale Air Force Base and all the drone pilots and the U-2 pilots were out there, and like they were like moving into the neighborhood. I'm like, one of these guys is going to assume my mortgage. And that's before I knew that you didn't have to be a veteran to get a mortgage, right? But
so when I'm looking at this graph, like I'm just trying to understand, like, okay, if we look maybe 2, 3, or 5 years past to the right, is this sort of like a new normal that people just have to adjust to, or something's gonna give?
I think something's gonna give
for them to come.
Are you saying like, is that trajectory gonna keep going?
Yeah,
that's how long can you sustain that?
You can't. That's what I'm saying. Okay, the interest rates is one thing, right? We got stagnant wages, high insurance premiums. Actually, right now, just recently, I read an article that there's a percentage of deals, and we're talking about realtors who are saying this, that like a percentage of deals were canceled due to insurance costs. So
21%.
Overall, 21% of agents said that they had significantly more issues recently with homeowners insurance, such as clients having trouble getting affordable insurance or canceling a purchase because of homeowners insurance. About 26% said that they had somewhat more issues, with 35.7% said it was about the same as the year before.
Is this a nationwide thing?
This is California.
Okay, California. Yeah, I was going to say, because like in California, I feel like for at least my transactions that I've had, it's been the FAIR plan, the fire stuff.
Yeah.
That's what becomes a deal breaker.
Yeah.
Because you'll get into, like, I've seen quotes in the 8s, 9s, 10s, 10,000 annually. So that's a deal breaker. That adds a significant amount to.
And not all in the foothills. Not all in the higher.
Surprisingly,
area. You get some in Sacramento, or the insurance company will say, hey, we'll do this, but we have to inspect it after. And if it doesn't pass inspection, we're going to drop you. And like, I got a notice from my company, and I had to chop down 3 trees because they overhung the roof and everything. And
I had to replace my roof. I had to replace a roof that the roofing company said.
Okay, talk a little bit about that. So
yeah, that was wild. So what I'm getting at with that, I'll caveat into the story, is that this has historically been more of a for, like, I guess Florida, like flood insurance, and for us it's been more of a fire insurance thing. But as of the last however many few years, just talking to my insurance broker buddies, like everybody's not happy with California insurance and
Right.
the insurance commissioner, blah blah blah, all that stuff. But for me, I had a wood shake roof on the house, and I've had multiple, like, even because the thing about wood shake is like it looks like trash, like, but it's still and it's good, it's functional, but it just, I say trash, but like it looks like the way it's supposed to look, but it almost deceptively looks in worse shape than it is, unless you're out there pressure washing it, even though probably not a good idea, but like anyways. So it's still a good roof. Like it's got, like I've had roofing guys come out, a couple companies, because like, maybe just in case. So, and everybody's like, dude, you're good for another 15, 20 years. You're good.
Wow.
I'm like, all right, cool. And then I get a letter, and trying to think.
Get to the point.
I'm trying to think if I should throw down the company. I get a letter about like, hey, you have a wood shake roof. Like you need to replace it, or we're going to drop you.
Yeah.
So I go to my broker. Hey, what's up with this whole thing? And he's like, yeah, man, our folks are getting dropped for multiple reasons, not just roofs. So I end up replacing the roof. So they extend me. Cool, we'll keep you for a year.
Oh, no.
And they dropped me after a year. That was like, I could have not done that. I don't want to
laugh at your
I know,
but
you just spent a lot of money on this, and I didn't have to technically,
So how did you solve the problem?
I put on a new roof and then went to another company. But the problem is, like, it was kind of a rock and a hard place, because no other company really truly wants to go with you if you have a wood shake roof.
Right.
So it was easier for me to get another company once I have a new roof. Yeah. But if I called every single broker, I probably could have found something. But
yeah, but it'll just give you a higher premium.
Yeah, theoretically, yeah.
So when we're talking about home affordability, if we take out the mortgage rates, like the issue with now that the mortgage rates are higher, homes are, for some people, are more unaffordable. What are some of the things that you guys think that could potentially start like affecting this trend in a positive way towards, for example, like I've been thinking a lot about this because there's a lot of conversations that I'm having with people and seeing online as I put out some videos, people write certain comments and ask questions. And I started looking into this thing a little more. And I noticed that right now, when you look at the homes that are being built by the builders, they're always, every year they're building like bigger and bigger homes. So they're not really building in like starter homes, what they used to build. So check out this chart right here. So it shows from 1975 to 2025, the median area, the square foot of a house, single family residence.
Hey Dave, can you zoom in on that one too?
Got a bunch of old guys over here, man. You need help.
So it's obviously the low number starts at 1.6, so like 1,600 square feet, right?
Yeah.
That was somewhere like 1,700 square feet, where it was like in the 70s and 80s, and then
down a little bit.
And then look at what happened like after 2000, 2005.
Well, you know why I started taking off over into 2020, because like rates were down in the basement, so people don't care about the price of the home; they care about the payment. So if you have lower rates, they're going to build bigger homes because the payment will.
Sure, yeah. But when you look at our American culture and how many people are actually having kids, and like for someone who, let's say they're married, they're a couple, maybe they have one kid, maybe they don't have any kids. They don't need that big of a house. I'm sure that if builders right now would be building, let's say 800, 900, 1,000 square foot homes, I think there's a good amount of people that would buy those homes if we're talking about homes like in the mid 200s, right?
You're talking about like the Lennars, the Bees, like the home builders that can do it, right?
Yeah.
So I think this is two-pronged. And I'm not talking about spec builders, right? Those guys that come out and build this one-off spec house and custom, of course they're not going to build this.
No.
The margins aren't there. And so in the same framework, I think the margins probably are better for these guys too, right? Now, theoretically, more volume, right? You could put smaller homes on smaller lots and theoretically stick more houses in there. And I think that, given some of the things we have going on with like housing availability period, I think that might kick in, because we're offsetting that by going, okay, you can put ADUs now on the sidewalk if you want, right? So being facetious there, not on the sidewalk. But so I think that could change a little bit because of that. But I also think if you look at that that trajectory of like when it started creeping up, you also have, I think, the just society, the vanity of society, as in I have toys, I have an office, I have a gym room, I have this and this and this. So that probably wasn't a thing in 1975 when Dad worked at the factory or was on the military base. I mean, perfect example. Look at North Highlands, right? You have blocks and blocks and blocks and blocks of houses that are all 900, maybe the biggest one's 11, maybe the biggest one's maybe 3-1. You know, all military housing, all kind of like originally that's what it was. And so there you go. From there, you know, as we progressed, everybody's got toys, everybody has things they want. And then I don't think it's necessarily because of bigger families like you're saying, but I think part of it has to do with just kind of the vanity of society in the first place, but then also margins, right? Same thing. But I could see this I could see this changing a little bit with some of the new laws that are coming in. But who knows?
Yeah, I don't know. I just think that it's I feel like it would make sense if whether they can work on the regulations.
I think the regulations is a bigger issue than the square footage.
With zoning, and I know they're not letting, maybe builders would be doing this, but because of all of the things that they have to go through and get approvals and something like that. And obviously also the you're talking about profit margins and stuff. Yes, there would be, but if let's say if government right now is saying that, you know, we have an issue with affordable housing and all that, and instead of like building some projects somewhere, why not incentivize builders, help out builders to encourage them to build homes like this, you know, just neighborhoods of homes, 1,000 square feet, 900 square feet.
Have you had a buyer say, hey, I want to find something about 1,000 square feet? Have you ever had that?
No, I had buyers who don't need a 1,600 square foot house. Like I just recently closed a deal with a buyer who actually purchased a duplex, and he is single and he doesn't need a big house. So he's fine living in I think one side was like 980 or something, under 1,000 square foot side duplex, 2 bathrooms, 2 bedrooms, living room, kitchen, 2-car garage. That's all he needs. So I don't know. But again, it's like this, for something in this area to change, I think this is going to take a lot of time for laws to change, and the government just moves so slow when it comes to this. So that kind of brings us to the topic of renting versus buying. I just recently saw a post. This guy's name is Nick Huber. He made this post on X, and here it says, renting a house is a non-starter for me. I upgrade my house constantly. I want a sauna installed, an outdoor kitchen added, a garden, irrigation for the garden. It doesn't matter which one makes more financial sense. I want control of my property. And I think this is sort of like an answer to some of the well-known business guys, podcasters who are saying like buying a house should not be a priority for young people. Like, you know, like we're talking about earlier about how people are discouraged that homes are not affordable, and that they're basically saying that you don't really need to prioritize buying a house. So I think this kind of goes into as a response to that. What do you guys think about this?
I mean, that's awesome if you have the money. But if you're a young 20-something-year-old that's just bootstrapping it and you're, you know, living paycheck to paycheck, I mean, that's cool and all, but it's not a reality for a lot of people, you know.
But rents are through the roof too.
Yeah.
So, you know,
it just look at it and see what I would love my kids to buy in their early 20s, and I'm going to do whatever I can to help them do that, because I mean, that's just, the longer you keep that home, the more your wealth you build. So I mean, I agree with the guy. I love it, but I don't know if that's cool. That's his point of view.
Yeah.
I think it's better to be a homeowner if you can. It's just all the way around, it changes your life financially.
There's a stat that shows that homeowners' net worth is 44 times the net worth of
Renters.
a renter.
Yeah.
So when you're talking to someone who is seeking advice on whether they should buy or rent, like what do you tell them like to look at? Or is there some sort of like formula that you use? You guys seen the home buying formula that I just recently saw? This if you can pull it up, David, it's basically a formula. This is what the guy was saying is this is how you decide whether you should buy or rent. So if you take the medium home price, or let's say the home that you want to buy, and you divide it by so 12 would be 12 months of the monthly rent, and if the ratio is 15 and under, then you should definitely buy. And if it's somewhere between 16 and 20, it's up to you. And if it's 21 above, then you should rent. Have you guys seen this formula before?
I haven't. It's interesting. We use a rent versus own comparison.
Mm-hmm.
So I can plug in the zip code, the house, like the size of a house, all that kind of stuff. It'll spit out what the monthly rent would be based on that zip code, and I can compare that to a loan. And so and I showed people so the different components of owning is going to be, one, you're paying down principal, right? One is the actual payment you pay. Sometimes rent is going to be cheaper than buying a home for 4 or 5 years, but after 4 or 5 years, because rent keeps going up, you tend to see it level out and over time, even if someone's over 9 years, they're paying $20,000 more as an actual payment than they would if they were renting. How much equity did they gain? So we show them the equity gain, and then how much do they pay down from their principal balance? It's like a forced savings account.
Mm-hmm.
And then tax benefits, right? Now the SALT, the state and local tax got increased.
Mm-hmm.
They can write off more by owning a house versus renting. So, it's a good exercise to have with people, and I find more people than not want to buy after seeing something like that than before without seeing it.
I see. Yeah, I don't know. I saw this kind of sometimes go on Zillow and look at because they have homes that are marketed for rent. Check out this house. So when you look at David, can you scroll down to where it shows this graph here? So first, this right here is the value, right? So at the very peak, it shows that it was worth about 1.9, and this is mid 2022 right there where he has it. And then when you look at right now, this estimate shows 1.56, right? But click on the rent estimate. Look at this. With almost every house that you can pull up right now on Zillow, this is kind of what you're gonna see. At one point, during those years, that's kind of where the rent was. Look at it right now. $4,000 from 7.
Wow, that's wild.
What's that mortgage if you bought that 1.5 mil, 20% down? What are you thinking that mortgage is going to look like?
Speak up.
I with taxes and depending on everything else, maybe $6,000.
So I think that's another thing that none of these numbers or rules of thumb I think are in stone, right? It fluctuates to say that, hey, sometimes it's if you're looking at this question from strictly a financial standpoint, as far as through one prism of monthly expenses, sometimes it's cheaper, sometimes it's more expensive, right? But then obviously, you have additional costs you got to maintain it on. It's not a call to the landlord,
right.
Hey, you go, replace the toilet and stuff like that. But I think as a whole, going back to and I hate to think of this as wealth creation, but you're right. It is a forced savings account, right? But with that in mind, I hate the notion of thinking that the place that I live is my nest egg and my investment tool, right? Because if you look at the Kiyosaki school of thought, your house that you live in, that's not an asset, right? But it's the rental house that's bringing you income, that's an asset. So. But at the same time, I know my journey into the investing in real estate world started from my primary house. Yeah. As soon as I got enough equity, I was able to pull out a HELOC and start, getting a rental or flipping a house because I had this pool of money that I could use to do that stuff. Risk tolerance is different from everybody. I get it. But going back to this whole rent v buy, I think control is going to be a big one. I think the way that guy's talking right now, that kind of thought process is a little more on the rise, just from people like, hey, no, I do want to own assets. I do want control. I don't want, this whole 2030 thing about, not owning anything. No, well, I don't want that. No, yeah, I want to own something now. But it is a tool at the end of the day. I know plenty of guys that, speaking of like military guys, that they'll get shipped out. Okay, you're in Texas, and 2 years later you're in North Carolina. And everywhere they went, they bought a house. And then that was their rental portfolio.
Yeah.
And then now they have, however many doors, equity's growing, and then, hey, they need some money. Well, they go refinance this one, pull out X amount of dollars. The rent is still covering it. Then cool. They just got some cash that's not income, so it's not gain. Capital gains assessed. Talk to your local, tax advisor. But so it's definitely, if you're going to be wise about using it as a tool, this is the way to go. Like for me, in my thought process, I can't fathom unless I absolutely have no other option of paying somebody else's mortgage for whatever reason,
Yeah. Well, let's move on to the most exciting topic of today's podcast, AI. So, like I mentioned, AI is really revolutionizing a lot of businesses and industries right now. If you guys look at the last few years, has AI helped you guys or disrupted some parts of your business and how you do business?
Hadn't disrupted ours.
No.
Is
it helping?
It is. I had the luxury of working with a company that one of the owners created all of our software that we use to do loans, and he has his program and he's always been improving. So like now, what used to take maybe 25 minutes to do something, I can do in 2 minutes or something like that. So because things are built in, and the program is smart enough to know that if someone said they're self-employed, it's going to ask them for tax returns, versus me having to manually write a list for the person and type it, in an email and send it to them. So it's just it's improved it. I don't think in our company. I think I told you this a long time ago. The guys, when I first joined, one guy was like, "I'm afraid we'll be out of a job in 10 years." And one of the owners was like, "You know what? We actually tried doing that for 15 years. And to just how could we do this with no loan officers?" And it said, "You can't. It's too much of a relationship, the business. But if you have the tools to help you be faster, bring more value, automate the process to cost less to do a loan." You know the average cost to do a loan is in the U.S.?
Just any loan?
Yeah, like how much does it cost a company to manufacture a loan?
That's a good question. I don't know.
Like somewhere between $9,000 and $13,000. And so I look at our company, and we're like $7,000 or something like that. So we can take that, give it back to the buyers, right? And so
is it because of the tools that you guys use and
yes,
AI?
it's so expensive. It's all subscription based. They're It's like companies talk about their tech stack, and it's like just this Frankenstein cobbled together list of not communicating software, but versus if you could actually cleanly do it with one system, and it all talks, it knows what you're doing, So anyway, yeah, I think it's helped.
What about for you, Gintaras?
It's almost. I think like the macro question is, are those realtors going to be around in 10 years, right? There's that kind of question, but like on the micro, I think like you're saying, certain things are happening faster. Certain things that you would have to sit and spend time on now, you can just, have AI do it. There's a lot of, I think I'm probably a little less out of the loop with like the software stacks, because I know there's a lot of companies that are trying to develop stuff and tools, and it's all a subscription-based same thing.
Yes.
And I try to stay out of it as much as I can until I really need something. But I feel as a whole, it's those that that embrace it are going to be better and faster at what they do. But at the end of the day, I think the relationships are paramount to anything else.
Yes.
So.
Yeah, it's a relationship business, and definitely AI is improving and enhancing the service that we provide. So when we're looking at technology, right? Some people who are still in the industry, they're kind of looking at AI and different tools, technology tools, and they're still sort of like can't really keep up with it because it's just moving so quickly. There's new tools available and coming. Some people are jumping on board. Some kind of are reluctant. And at the same time, also when you're looking at the real estate industry as a whole, of how people right now are, let's say, generating new business, there's a trend right now when you look at some of the platforms like TikTok, Instagram, and YouTube as well. Some people are just really blowing up and going viral. So there's this guy here. There's a story that I just recently saw. I didn't know about this guy, but there's this kid, teenager.
I've seen that guy.
Did you guys see that?
Yeah, I've seen him before. He's funny.
I mean, like, is this kind of where everything is going?
No, but he's hitting a certain genre of people, right?
No, he is. And like, look, his whole idea is to create these kind of videos, right? And he's going viral.
But where this is on TikTok, right?
This is on TikTok.
So as an adult, I wouldn't hire him, but his peers probably are like, "Hey, cool, yeah."
Yeah, I think the young, like 20-something buyers, for sure, 30-year-old buyers. I mean, the key is like, what's going to be in 10 years? How much are people going to trust AI versus how many people trust AI? What percentage of the population trust AI now? You know what I mean? Like, or I look at it in a different way than someone that's yet to be born is going to look at it, or like my kids look at it, right? Like there were kids using it like a therapist or something.
We were talking about this, I think, with you about like, what social media platforms and where are we going to market and or have a profile or have a presence. And like, I don't have a TikTok, but I was like, do I need to? Well, it's all kids like just dancing. Well, yeah, but in 5, 10, 15, 20 years, those are your buyers, right? Yeah. And so if they go on, oh, look, there's 20 years of, Paul's content or whatever. Yeah. So who knows where and how this is going to come through. But I know like, going back to the relationship side of things, like most of my clients, I feel like that are like, older professionals. Like, this is not of interest. This is not who they're going to call. They want the relation. Like, I want to talk to a guy like if this kid was a lender, I'd rather talk to you who's been in here for so long. And like, I'm more meat and potatoes. Let's talk market. Let's talk numbers. Let's talk substance. Oh, cool. You're funny on TikTok, but what do you know about loans? right.
Well, that's the beautiful part about the business, right? Like, you're not going to appeal to everybody.
Right.
None of us are. And so like, you just find your people that really value what you do really well. And you're always going to be, and deliver amazing value, you're always going to be in need.
And I don't know, maybe this kid is a genius and knows everything there is to know about the market. I have no idea. But
I'd love to see his stats. You could look up his numbers, right?
Yeah, I mean, if you do some research, you can look at, well, when I look at this, I'm thinking about, okay, and I see a lot of people in the industry kind of jump on this wagon, and they start kind of copying these people and trying to do, because it's all about how viral you can go, Right. And I'm wondering if the priority becomes how viral can my next video become versus how more value maybe I can add to my client.
Like, where's the focus here? Me getting better at what I'm doing versus me, right?
That's what I'm saying.
There's some brokerages that people feel the same way about, right?
Well,
What's our priority? What are we doing? So, no, yeah.
Some people want to be famous. Some people want to sell homes.
Yeah.
There's a guy who does loans. He, I think his YouTube is like "Win the Home You Love," and I think it is. And he sits there. He's a loan officer that worked in. His dad started a mortgage company. He was a realtor, invested in a mortgage company. Brought his son and said, "Hey, start doing loans." And the guy didn't know nothing about loans, so he would start reading like the handbooks. For Fannie Mae, Freddie Mac, Ginnie Mae stuff, FHA, and like he would literally do hour-long videos. Yeah, that's the guy. And he sits there and he reads guidelines. You're like, okay, here's 2025 FHA guidelines. This is a 3-hour video, and he has people from all over the country that refer him or want to see him, and he just hands them out to their loan officers. And
he just reads the guidelines.
Yeah, literally, he's look. How much do you want to spend? Like he's
like hour, 2.5. I lost my spot. Let me start over.
Yeah, he's super chill. He's like.
Really?
Yeah. So that's the beautiful part of the business. There's some agents who are like, hey, I like to meet people in person and shake hands and do business that way. And there's some people like, everyone finds me on Reddit.
But there's something to be said about that type of a thing, because like if I'm like that, I'll find that, I'll find that.
And he's bringing value to the people who want to know what are guidelines.
Mm-hmm.
Like, how do I know if I can buy a home? And so that's cool. That's a great way to do it. He's not just running through a house being goofy, but
have you seen like that TikTok kid? There's kind of a trend of a couple other, I don't know their names, but there's a couple agents where they do either they kind of like throw shade at their listings and they like just kind of talk trash about them as they're like, oh, this is dumb, and they kind of go over it, and then there's another gal, I forgot where she's out of, but she's just like super sarcastic, dry humor, and kind of same thing. She'll point out a window and it'll remind her, trigger some other thought, and then her content, she's in the house, she's selling, but her content is almost nothing about the house because she's talking about other stuff. But it's funny. It's just a dry, like I'd hire her. That's my kind of sense of humor,
But I'm just wondering, like, if, let's say, like, you plan to be in business for the next at least 10, 20 years, right? Like, if the buyer pool or the clientele will start changing because now you got these younger kids, right, growing up, and now they're buyers or in some cases are sellers. And, like, we're living in an age where everyone's on their gadgets. And if they don't know you and you're not on some of these platforms, they're just not gonna come to you because they don't know you, they won't find you. So I think that there still should be at least some sort of priority to be present. Now, how you deliver the content, how you deliver the information, and what your brand is and what you stand for, that's something that you kind of have to figure that out.
This is the whole concept of evergreen marketing, right?
Yeah.
Because
that stays on
especially like YouTube, right? And that's, I find myself falling right into the stat of more people when they do their research or search something, they don't Google it, they YouTube it, right?
Yeah.
So, and that's there. Once it's up there, it's there. That same video of doing an Auburn, market review or whatever, that's going to be there for forever. So you can, and you've experienced this. Paul's gotten calls from his YouTube videos from people out like nationwide,
Yeah.
So there's, you definitely, there's a presence there. And then it's funny because like I counter that with, I look at like there's guys in my neighborhood. I met a realtor. I only knew he was a realtor because I saw a sign in his garage, we got to talking, and he's like crushing it. Never heard of him. He's crushing it because he's an old timer. He's got this Rolodex of contacts, and it's just relationships.
It's awesome.
He's like, that's his, source of business, and he's not up here doing anything like that because this is, 10, 20, 15 years, whatever, of like, these are my clients. These are people that refer to me, blah, blah, blah. And so, but like now, if you're starting out now, can you be just that guy without a social presence whatsoever?
I don't know. Yeah, maybe.
All right. So I don't know if this is kind of you're experiencing this as well, but sometimes like when I have a client and I'm sending them certain listings, properties, they get them, they review them, but at the same time they're still scrolling through Zillow, Redfin, Realtor.com, and kind of looking on their own, right? Obviously, because these apps are really easy to use, user-friendly. But recently, I don't know if you guys heard this story or not. David, can you pull up that article? So there's a few lawsuits right now that are happening where Zillow and Redfin are being sued by 5 states, the FTC, over alleged rental advertising scheme. And not just rental advertising scheme, but for steering buyers to their sort of pool of lenders. And, I actually recently kind of wanted to test out how it works. So when you find a listing that you want to see on Zillow and you want to schedule a showing, obviously Zillow makes it really hard for you to actually find the listing agent because they have it in a section where it's really, really small. But if you're going to make an appointment, you're going to make an appointment with one of their agents, right? And as you're moving through the process to confirm the appointment, there is a check mark that is auto-checked for them to contact you regarding a loan. So unless you uncheck that, you're going to get called right away about the loan. And not just that, you're going to get bombarded with phone calls from their pool of lenders who are going to call you. So now they're in hot water because apparently there's something going on where they're like, yeah, this is not right. Have you guys heard about this story? Looked into it?
I don't know about it. Is this Redfin? specifically?
Zillow and Redfin. But Zillow is actually involved in more lawsuits. This one particular one is they're going after both Zillow and Redfin. But when it comes to like the steering part, that one is a separate lawsuit that they're going after Zillow for doing that.
Interesting.
Yeah, I don't know. Like with the Zillow platform, I also feel like it's like people get kind of misled because I just recently had an experience. I actually made a video about that. So I have a buyer, and she sends me this listing off of Zillow. She's like, I really want to see this home. The home looked really, really nice. And it was priced, I think it was like at 1.3. And it listed all of the features of that house, what that house had. And the pictures looked great and everything. So I'm like, wow, this is a great deal. I think it was in El Dorado Hills or Folsom. No, it was in Folsom. So we go out there and we talk to the salesperson at one of the model homes, and we're like, hey, we want to see this home. It's for sale. And she shows us the model home. And of course, as we're walking through the model home, we're realizing that this is the home that's advertised on Zillow for 1.3 something. So then we proceed to ask her a question. So is this home actually selling? Oh, no. This is just a model home. What you saw on Zillow is that home right there. And it's like, I'll take you there. So we drive over there, and the home, although it's the same floor plan, completely different. So basically, I understand that new homes, when they get listed on Zillow by builders, there is this thing where you're looking at pictures of models, and usually there's disclaimers, or at least should be disclaimers, that these images are of a model home and it's not at this price. Nothing like that was said there. So basically that home, the salesperson said that home, if it would be for sale right now, it would be at $2.3 million because of like $600,000 or $700,000 worth of
the options
upgrades
they put in.
Yeah. So I'm thinking like if
that
I
it right
just
there?
That's it right there. So
Yeah, you don't find that.
this is the actual home. Look, they put one little can light in the middle of the. But look at this work. By the way, so this is the actual home.
No.
Look, yeah. David,
who's
do
the
you have
builder?
pictures of the model home or the video of the model home?
Hey, who's the builder?
The builder is, should I say? I don't know if
You
I
could
can say
bleep it out, I guess, right?
But anyways, I'll tell you later. But that's kind of what they're doing. And I'm thinking, okay, if we are going through this, if we experience this, how many more people? What if someone like from Bay Area drove to see that house, was excited about that house, and they're like, actually, for this price, this is the actual house, and it's nothing.
Yeah,
nothing compared to that.
And then how many people get roped into buying it, and they're like, you have to add all this stuff to get what you want, and you don't know where that is going to end up.
Oh yeah.
Price-wise.
Oh yeah. I mean, and obviously the upgrades, like their basic upgrade package is like $150,000, and that's like you're getting a little more can lights.
One more can light. Where do you want this one just to make it?
Let's put it in the bathroom. My God.
Can't really make it symmetrical.
So my question for you guys, like, what do you think, like overall, like these platforms like Zillow and Redfin, are they like net positive for the consumer or no?
That's a really good question. I don't know about net positive, or I would say that like Redfin obviously just got purchased by Rocket Mortgage, right?
Oh, really?
Yeah. So if you look at Redfin now, it'll say Redfin powered by Rocket. And so they're a Rocket company.
So you would expect them to go to Rocket Mortgage.
They are going to. So Redfin at one point, when I used to be one of the only two Redfin recommended lenders in the Sacramento, Lake Tahoe area. It was me and this other guy. And then Redfin bought, and I did a lot of Redfin business. And then Redfin bought Mountain West, I think, or I forgot. No, not Mountain West. They bought a mortgage company. And then so then all of a sudden, all those loan officers were preferred lenders, right? And I was still on there, but I was like way on the bottom. And so when they didn't own a mortgage company, they was like every single time we got to give out 3 names for lenders because we don't want to steer. The second they bought a mortgage company, no one else got recommended. You had to, and they had pull-through requirements of what they had, of what the buyer's agents had to have so many people use the loan officer for the in-house lender because they were making money on it. It's their company. And so, I'll get in trouble if I don't. I can try to throw you every once in a while, but maybe I got to give it out to this guy. But if he doesn't respond within 48 hours, then I'll give it to you, right? To call the guy. So yeah, of course they're trying to make money. They're pulling it together. So and the rental thing too is pretty interesting too. Some people that don't want to buy, that's too much. Well, maybe you do the rent thing through them.
Yeah.
So it's like So as far as like a choice thing, I don't think it's not giving the buyer more choice.
Yeah.
But I think going back to I forgot who it was that brought it up about, the association didn't buy Realtor.com as a domain. Like they don't have control over that. Obviously, it's a third party. It's a company. Mm-hmm. So the theory has been historically, the real estate agent back in the day was, the person that had the binder. You want a house? Here, let's go. Well, look, here's the MLS, right? That kind of a thing. So obviously, as technology went forward, now everything's online. Well, unfortunately, the MLS website and the app, it's terrible.
It's bad.
It's bad.
So people look to other sources to go look.
Look, I've put people on drips, and I've been on the receiving end of a drip, from them. I'll send it to myself. What does this look like? It's clunky. It's slow. I don't like it. And I work there, I guess. I don't like it. I like it's, if you look at apps, Zillow, any one of these is 20 times better platform and user interface than anything, at least our MLS that comes up, unfortunately. So with that being said, I kind of embraced it as, okay, cool. There's better chances that you're going to find the house you want doom scrolling at night on Zillow, than from one of my mailers. So I kind of honestly, I've kind of let go of, I'm going to find you the property.
Yeah.
I know you're going to look on your own. I'll send you something that I think might match the criteria, but I'm not going to bombard you with hey, here's the portal, and because it's not a user-friendly portal.
I agree.
So
with you
what
on
I would
that.
have happen is I would have folks just send me Zillow whatever links, and then I would log on to the MLS, read my confidential notes, blah blah, do whatever I have to do. So I've kind of made my peace with I'm probably not going to be the guy that finds you something unless it's off market and it's something hey, I found something, maybe we can bring something together, right? But so with that being said, that's kind of part of the gripe with the association is you guys could have been Realtor.com and done something with this in the sense taken that domain and built a great. I mean, look, it's 2025. There's no excuse for this. We could have a great app put together.
Correct.
Heck, you could probably have AI do it for you. Yeah. But point being is I've just kind of let people bring the properties to me, and I just go from there.
I think having that conversation up front with them and saying hey, look, you're going to go look. There's tons of different places you can look. There's tons of different places that you're going to. The algorithm knows you're looking at homes now, dude. You're going to see stuff on TikTok.
But what else is interesting? Correct, yeah. But what else is interesting is, I always, if somebody sends me a property of interest, I'll go to, or if it's a listing that I'm getting prepared for, I'll check what Zillow, Redfin, all these guys say because I'm curious because their algorithms are all a little bit different. Truly and Zillow are one company, so their numbers are the same.
Really?
Yeah.
For the estimate of what the home's worth and things like that. Yeah, yeah. And they all got burned too. They got burned because they were doing the Zillow offers. And buying homes, and then they were buying homes for more than.
No, I'm sorry, they were in the red in the billions.
Yeah, just horrible.
Right.
Yeah. So they really toned down their.
My point being is any one of these apps, I feel on the user interface side it's just superior at that point. Now, is the data good? Is the steering thing? I'm not talking about that. I'm just talking about hey, it's 2025. I want to go look for a house. I don't want to deal with this portal website, and even on the personal real estate, your realtor websites, having an IDX feed, is it that important today? I mean, I do it, I have it, but is it that important? Because 9 times out of 10, you're just gonna crack open a Zillow app or whatever.
Yeah, and that's kind of what I said in the video. Is I understand, and I think that it's totally fine, to use because it's very user friendly. Look up some data, some information, maybe send some of the listings that you want to go see to your agent. But the actual process. Once you start contacting somebody there and what kind of service you're going to get with one of their agents, because here's what happens. So let's say if I go and I request a showing and they're going to send this request to one of their agents, this agent can be someone who barely closes any deals, doesn't really know that location very well. And now I'm sort of stuck working with this agent who can't tell me if I'm at an area. He can't or she can't tell me like the valuable information about why this neighborhood is great. What's going on in this area? You know, like the typical stuff that we usually help with and talk to our buyers.
Yeah,
you know?
but they can afford to be a premier Zillow agent. The monthly payments for the leads or whatever, right?
Yeah.
And it's usually what, like the broker usually.
I think I think a lot of times the big house brokerages will. I mean, I've heard people spending tens of thousands of.
Oh yeah,
dollars
for sure.
like crazy.
There was a team in Roseville for the longest time. I knew they spent like $17,000 a month.
Yeah.
And they at the time they made their lender pay half, and they paid half, or they made the people on their team, you know, either take a big reduced commission and stuff. But
that was
it's
part
very
of like
difficult
split,
to do that
'cause
nowadays.
Yeah.
Okay, so let's move on. We're gonna talk a little bit about the latest DRE consumer alert that they sent out. I don't know if you guys received it or not, but I don't want to talk about all of them. There's a lot of information here, but the first one I want to touch on, because I've been getting bombarded with this, and I think that this is kind of goes hand in hand with what this alert is about. So property flipping fraud. So this is sort of like the stuff. I don't know if you guys get those ads or not on YouTube or even in mail, like, hey, we want to buy your house for cash, avoid agent fees, and we're buying it as is, and they always use these terms like avoid massive commission fees, and they draw this whole like picture, like, hey, if you're gonna go and talk to a realtor, you're gonna have this horrible experience, you're gonna lose money.
Spend all kinds of money.
But in fact, what they do, and this is kind of what this alert is about, is they kind of prey on people who are maybe going through some kind of hardship, and maybe they do need cash quickly, but by hearing kind of their proposal and what they're saying, they think that, hey, maybe this is the solution for me. But in reality, what they do is they come in and they lowball, and say, hey, we're gonna give you like pennies on the dollar for this house. And they really get on them because they have a very, solid sales team that they know kind of how to follow up and work it, and they're really going to push you to make that decision quickly, because they don't want you to call your relative or your neighbor and say, hey, I'm thinking about selling my home for this much, because then the person's going to say, whoa, don't do that. Maybe you can sell it for more, or give you a better advice. So that's kind of one of the things that they're warning people about, is this, because apparently there have been a lot, and I know that because I constantly get those ads, because I don't know, like they can say, like the landing page can say, like, here's the name of the company, right? Let's say like something.
A lot of times it
buy
doesn't
home,
even have that,
but it's
it's just a generic call to action landing page for your info.
How about the poster board just written on by hand, like
all those, and you never know who's behind it.
That's my guy right there.
But see, same thing. This is interesting. For starters, this is nothing new.
Yes.
Right.
Second off, say that.
Second off, again, it's a broad stroke, because you and I both know flippers. We've flipped where every single one of these things I feel like can be done ethically, but there's obviously people that are doing this more nefariously and taking advantage of people, especially like some of these I feel like are almost kind of targeted towards like the elderly maybe.
Yes, I think that's why, because they are specifically targeting elderly and those.
Number 6, equity skimming.
That's an interesting one. That one, the equity skimming thing, this is another way to say sub-2 mortgages, which again, if you look at it through that lens, well, this sounds terrible.
Yes.
But if you look at it through a lens of like, hey, I can't sell my house. Nobody's coming here. The only way I can is if some investor, takes over and does a subject to mortgage. So assumes it not in the traditional sense as like a Fannie Mae or a VA or FHA,
you start making
but
the payments.
you're doing it. You're basically, you're taking title. They convey title to the house, right? Yeah, sure, there's an element there, but there's a way to make it bulletproof, essentially. And then you're basically going to be paying their mortgage. You're going to give them some cash or keys. They might be upside down. There might be whatever. But there's ways to do that where that makes sense for everybody. And you set in place a mortgage processing, like a third-party company that insures, because that's crazy. Yeah, you're going to pay you want me to title a house, and then you're going to pay my mortgage? How do I know you're going to pay? Sure, it sounds crazy. But when you have all the proper pieces in place, there's a third party loan, like a processing company, that they're going to do the mortgage, and like you still have, go put a lien, foreclose, blah, 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 do the whole 9 yards. There's every one of those things. I feel like there's an ethical scenario in there that it works for everybody.
Well, and the reason why this alert is out is probably because people experience the unethical.
100%. Sure. And then when that happens, it's not like, hey, I got scammed on, a bicycle on Craigslist. This is a house, somebody's retirement nest egg. So I get it. I can see it. But it's just, it's interesting because a lot of the stuff is in the world and realm of creative financing. And every investor that, is worth their weight in gold has a way or a strategy to make deals happen. And sometimes it's similar to this, obviously, but
Okay, I have a content idea for you. How about you go through all of these and,
do the ethical way?
And then show them how you can do it in an ethical way.
The good, the bad, the ugly.
I have that same idea for you.
And what about like more mortgage fraud? Have you heard of any?
I will tell you that the number one type of mortgage fraud there is. The number one biggest what's called item to cure or like issue is, can you guess?
Let's see.
Like today.
Yeah, right now, what's the biggest type of mortgage fraud that's going on? All the time, every day. I have to deal with it.
That you have to deal with.
Yeah, I hear people and I have to correct them. It's occupancy fraud, saying they're going to live in the house, but not live in the house. Mm-hmm. And they I don't want to pull my phone out, but I asked a guy. I helped him buy a home in Sacramento a long time ago. Helped him buy a home in Rockland. He travels back and forth to Nevada, so he bought a home in Nevada, and then he called me and said, "Hey, text me today and said, hey, can we refinance the Rockland house?" And I said, refresh my memory, is the Rockland house your primary residence? And he goes,
they all
you can mark it as that or something like that. He was like, so I'm like, yeah, no, we can't do it, man. So it's like, and it's just because it's so people, non-owner occupied loans are more expensive. If you buy a rental property, it's a more expensive loan. You put more money down than an owner occupied loan because Fannie and Freddie, their mandate is not to help you build a rental empire. It's to help more Americans be able to buy a home.
Mm. And when they go public, it will be to help us.
You never know. Right.
Are you doing DSCR at all?
Yes, I have one going right now. I love it. It's really cool. Debt service covered ratio. And, like the guy's rent is $2,850. The mortgage payment is $1,600. He's crushing it.
That's not bad at all.
And he's like, because he's putting a lot of money down. They work when you put a lot of money down.
Yeah.
And he's getting a really good rate that you would never expect. And it's no ratio, man. I don't look at anything other than does the rent cover the mortgage.
Beautiful.
It's amazing, and it's a non-owner occupied loan, which is why you can do it. But it's
20%
really
minimum period.
Yeah. I think if you don't put that much down, you're probably not going to get there anyway. Your rate's going to be really high because you can do it with as little as like the rent covers 75% of the payment you make, but your rate's really high. So like there's a sweet spot either over 1-to-1 or higher.
By the way, if some of the audience maybe don't know what you guys are talking about, which kind of program did you guys just discuss? Debt service covered ratio. Debt service.
It's an investor product.
It's an investor product. Yeah. So you're buying an investment property. We get a rent survey with the appraisal. So the appraiser is going to say how much the home is worth and how much should this thing rent out for. Looking at comps, they do comps for both. And as long as that number or the amount that the current renter is paying, whichever is less, if it hits a certain threshold above or at your mortgage payment, then you're good. And we don't have to look at anything else. Like
so
I don't have to look at.
That's like a true asset-based loan, right? You're not looking at how.
Well, it's more like you're still proving ability to repay because you're getting enough money to cover the payment.
So some of the guys that I feel focus more on DSCR talk about how it doesn't matter what your credit score is, it doesn't matter your DTI.
No, it definitely
the asset.
It's not necessarily asset. I don't think that's an accurate way of describing it. It's like it's the
hey, put that on that non-ethical thing.
Well, it's loan officers, man. They're on that thing. They should just say your average loan officer. And number 7.
We will post this in the description. The whole consumer alert in the description. Okay, so as we wrap this up and we are looking at 2025, which is in our rear view mirror, can you guys each share client success story from last year, or actually this year?
Oh, sorry.
Yeah, let's start with you.
Well, we have to have some optimism as we wrap this up.
Yeah, no. Well, I was gonna think. Here. You go. I'm gonna think of which one.
Yeah, I mean, like we've helped a lot of first-time home buyers this year, and I love explaining. I love educating a first-time home buyer. We'll do consultations that last an hour and a half because they have so many questions, and so I mean, I've helped more first-time home buyers this year than I have in a long time. And it's really cool because they're buying homes, kids in their like 25 years old, 24 years old. And it's really nice to see. So, I mean, I think I right now they're doing it because the pricing is too high. So the homes are overpriced. So we're getting credits and we're giving them payments for the first couple of years that make it feel a lot less than a 6-point-something% rate. And they can manage it. They're like, cool, I got this. This is good. And they're like banging out home ownership. I think it's amazing. Yeah.
And by the way, yeah, we really, really, really appreciate every time we do a deal. You guys are awesome, and our clients
that's
love
nice.
them.
I'll give you the $20 later.
That's it. Well, I was going to talk about that novation we did, but I think we'll save that for another time, probably, because it's just a creative transaction we had with the client where everybody walked out happy. The house sold for way more than it would have sold otherwise. Full remodel, long story, but that was a great one. I think for me, I'm in the middle of one right now that's very rewarding and satisfying, which is somebody that we've spent a lot of time looking for properties. We've wrote probably 6 offers, and we finally got an offer in. And that's one where we're getting these credits.
Yeah.
That's one where, we're going to have, it's a duplex that we're working on, and we were able to successfully put it in paper that, hey, it's going to be conveyed with one side vacated. Yeah. That's not something that we're going to have to deal with. And I think one of my biggest things, just for buyers and sellers alike, probably more buyers, is I'm a big fan of a proponent of if it's yours, it'll work out.
Right.
If it's not yours, it's just not going to happen, period. I don't care how good your offer is, which that whole thought process really got ingrained to me with the introduction with you a few years back. We had somebody where mom was next door. So grandkids, this and that. And we weren't the highest offer.
Yeah.
But you were on that file. And she's like, oh, you guys have Ken? And the offer above us was cash.
Yeah.
Mm-hmm. And so they're like, no, I know Ken can close quick. And so we got, so anyways, I'm getting that vibe here with this transaction, after as much time as we've spent looking at properties, writing properties. And yeah, it hasn't closed yet. Hopefully before the end of the year, we kind of have a longer escrow, given a couple, things that need to happen with hopefully getting it vacated in time and all that. But yeah, no, deals are happening. I mean, market up, down, sideways, deals are happening, period.
Yeah, people are getting deals.
Yeah. There's one that I can talk about briefly, and that was what's his name? Slav.
Oh yeah.
So
duplex.
yeah, I just remember a few months ago he came in here, we sat, and he's like,
I wrote on that one too, by the way, with this guy.
So anyway, so just kind of remembering where he was at our first conversation, and then at the closing, and how happy he was and how everything worked out for him. He actually didn't just buy one property. I mean, he bought one property. It's a duplex, so he didn't just buy a residence. He also bought
2 doors.
Yeah, 2 doors. Yeah. So now he's getting rental income, which helps him cover his payment. If he would actually just buy a home, it would just be so much more difficult to make that payment. But now he's got a good amount coming in as rental income. So, he was very, very happy and fulfilled. He just felt like, man, I just made the right decision. And by the way, thanks to you.
It was a great story.
Yeah.
And I right after we closed escrow, he's like, hey, the renter is asking me who I should send the payment to next month. Is it me? I'm like, it's absolutely you, brother. You bought a duplex. That's yours, man. Take that check. He was a great kid. It's a good example of someone being creative when times are different than you wanted them to be, and looking at the positive, what you can do.
Yeah.
I think so many times we look at what we can't do. Let's look at what we can do and work from there.
Yep. And as we look towards 2026, what are you guys' expectation for the year as far as real estate market, economy?
It's going to be as good as you make it.
I love that answer.
I don't think we're going to get, like, one of your questions was like, are we going to get down to the 5s? I don't think we're going to get to 5. I think it's going to be a long time. Unless the whole tariff thing blows, like, just totally goes away and all of them are like revoked, like that may cause rates to drop. But I mean, I think there's just too much stuff going on right now. And I think that people are like, I'm tired of telling people it's going to be better. It's not going to be better. So I'm just going to work harder, and it's not a big deal. Work harder, help more people. People still want to buy. It's still a great time to buy. There's tons of homes in the market. Buyers are getting deals. Let's go get some more deals.
What about you?
I'm kind of going to give you a cop-out answer, kind of ditto, but at the same time, I feel like there's so much content and so much articles, news out there that, like, whatever you want to believe. If you think
it's happening,
you think like, the sky is falling, I'll find you a host of articles from reputable sources that say the sky is falling. And if you're on the other side, more of a glass half full kind of person, hey, I'll show you like a bunch of articles from reputable sources that say, hey, we're looking, it's going to have a good, whatever sentiment, consumer sentiment is going to be, good. So it's hard. I kind of got out of the prediction game of like, now or later, should we buy now? There's people that haven't bought that asked me if it was a good time to buy back in 2016. They're still renting today.
Wow.
I mean,
would have been.
Well, and they're going to spend a lot more money if they decide to buy now.
Yes.
It's hard to say. There's there's still a lot of uncertainty, right? There's like what you're talking about with tariffs and whatever else is going on. It's hard to keep up with the 24-hour news cycle.
Yeah.
But I'm in the same boat as far as like it is what you make it. If you need to buy. If you need to sell.
And people, like, to his point, people that are not fans of the current administration, it's doom and gloom, right? And they're holding on, right? They don't want to do anything. They're just pausing, like fear, right? People that are in favor of the current administration, they're like, hey man, rock and roll, let's go, man, let's do it.
And their future for both of them is going to be different, because I think like our attitude has so much to do with our results and our outcome, right? Like how we approach just like life in general. And if we have optimism and we're looking forward to, we have, energy and we're motivated to do something, maybe change our circumstance, do something different rather than just sit there and type away and complain. And I have never seen anyone change their circumstances in a positive way by complaining a lot.
Yeah, by nature, that's not going to happen.
Yeah. So, all right. Well, with that said, that's it. Thank you very much for joining us. Until the next time.